Well, we had a higher trade in the overnight session on the Globex. Let's see if they're following through into the daytime session here. On the corn market, so far we have that July contract now trading at 457 1/4. So that would be 4 1/4 cents higher than where we were last night. We have the September at 462 3/4. That's 4 1/2 higher, and we have that December new crop corn up a nickel at 468 1/2. So it is showing follow-through buying from last night, although it is down considerably from our overnight highs, down about 6 or 7 cents. Now let's take a look at that soybean trade. We had some big double-digit gains overnight, and now they are following through, but even there, it's off of its earlier highs from overnight by a few pennies. July soybeans up 12 1/4 at 909 per bushel. We have the November 12 1/2 higher at 936. And in the wheat in Chicago, we have the July contract now 5 1/4 higher this morning at 543 3/4. And we have Kansas City on that July contract now showing a trade of 482. That would be 5 3/4 higher. Minneapolis wheat on the July is now at 563 1/2, and that is just one lonely tick higher, a 1/4 cent higher at 563 1/2. As I mentioned, the deferreds are actually about, we'll call it fractionally to a penny lower on the Minneapolis wheat. On the cotton trade, we have the July contract now starting out 38 points higher at 66.32. Brian Hoops joins us right now, and he is, of course, the president of Midwest Market Solutions. He's in Springfield, Missouri. Man, you had a lot of rain in that part of the country there, and it looks like maybe more of the same. What's the outlook here, Brian?
Yeah, more rain this morning. In fact, we've got some good downpours, and there's a lot of wet spots in Missouri, from that Clinton, Missouri, all the way up to Kansas City. The crops that a month ago were looking great, off to a really good start, are now just extremely wet, and a lot of replant going on. And it's a pretty dismal outlook for that area. But you look at the forecast for this week, you're looking at very wet conditions across Missouri and Illinois, Indiana, and that's got the wheat futures moving higher. It's going to disrupt the harvest of the winter wheat crop. And then you're trying to plant double crop soybeans behind it, and that's why we've seen so much strength in the soybean market as well. Just that lack of planting progress being made in some of those areas, lack of harvest progress being made. It just is a real concern for the trade right now that has us adding in some weather premium.
I believe over the weekend I heard from someone traveling through Ohio, where, of course, we know there's been all kinds of delayed planting and wet issues there. But if I recall, they had driven along a certain highway, and it was for an extended length of a drive. And they said they were amazed that they did not see 1 acre planted on that entire drive. No corn whatsoever. No one had gotten in the field yet this year. And I just thought that was mind-blowing to hear something like that. And I guess that's not quite the only place around the country either like that.
Yeah, exactly. I've done some traveling as well, and there's been a lot of those acres in that Missouri stretch that I traveled on that had done some replanting of corn. So it should be waist to shoulder high, and it's just starting to come out of the ground, maybe ankle high now. It's way behind normal. And even in good parts of Iowa, from the southern border up to northwest Iowa, where we have an office that I went to over the weekend in Storm Lake, Iowa, the crop is looking pretty good, but it's way behind normal, at least 3 to 4 weeks behind normal. And, at this time of the year, a lot of that crop is waist to shoulder high by this time frame when you're off to a good start, and it's far from that this year.
Boy, it's definitely not a year where you want an early freeze, that's for sure. The way things are setting up this year, it's going to be a dicey growing season. Brian, we'll come back here in a moment, and we'll open up our livestock trade as well. They had a very negative finish on the lean hogs last Friday. We'll see if they follow through today when we come back. Brian Hoops is our guest. He's with Midwest Market Solutions in Springfield, Missouri. Time to talk livestock. And Brian, let's see how we're opening up this week. We had a negative close on the entire complex on Friday. The live cattle, the feeder cattle were lower on Friday. The lean hogs were over $2 lower. Let's check out our live cattle futures as they stand right now. And in Chicago, we currently have that August contract. We'll start there. It's 20 cents higher at 104.47. However, all the other months are a little bit weaker. We have October down 20 now at 105.28 and December down 28 cents. Let's switch over to the feeder cattle market. And now on the feeders, once again, we have triple-digit losses today. August down 115 at 134.38, and we have September down $1.18 at 134.63. And on the lean hogs, where we had the big losses on Friday, well, we're just kind of holding their own today, just barely moving on the nearbys. We have the July down 1 tick. We have August down 8 cents. We're at 80.55. But if you get to the far out deferred contracts, they are lower out there. October down 82 cents. So, Brian, talk to me about what we are seeing happening here in the trade. The big move today is in the feeder cattle. Is that on account of feed grain prices, or what's going on there?
I think, that'll continue. If we continue to see corn prices working their way higher, and there's every indication that we haven't put a top in yet in the corn market, we're going to see feeder cattle remain under pressure. The live cattle, I think, are going to look towards Friday's cattle on feed report, and there's some estimates that we could see placements below last year's levels, which will be ultimately supportive to that cattle market. And there is a lot of ideas that we've put a summer low in the cash markets and the futures market. If we can get the cash to stabilize, we should see a rally in the futures based off of the higher corn prices, and with the the feed costs, they'll continue to move higher. That'll eventually pull those deferred live cattle prices a little bit higher as well. But the key will be if we can hold the cash low and hold last week's lows in the cattle market.
Yeah, on the feeder cattle trade, we're not all that far away from the lows that were set, I believe, 2 weeks ago at this point?
Yeah, that's what a lot of the trade is looking for, is a test of those lows once again, maybe even taking them out as corn prices continue to move higher. There'll be some more pressure against those feeder cattle and possibly the front month live cattle as well. But, in the longer term, that is a little bullish for the cattle market. We do push our cattle ahead, and we're seeing that with our cattle weights and our hog weights as well. Both of those commodities, we see cattle and hogs being pulled ahead. Weights come down. That takes a little supply off the market, pushes the product through supply chain a little bit faster. So in the end, you end up with smaller supplies, 6 to 9 months out, and that's usually bullish for the cattle and for the hogs as well.
All right. Well, Brian, thanks for the information today. Brian Hoops of Midwest Market Solutions, and he is in Springfield, Missouri. I wanted to take a look at the dollar value and the crude if we could. Dollar value not doing much. We're down 150 points in the June futures on the crude oil. That had some big swings last week. And Janet, it's down 36 cents on West Texas crude futures on July at 52.15 right now.
All right. As always, thanks for keeping us up to date.